to take a quick overview of state and local government budgets and taxes and focus in on where state and local governments get their money and how they spend it. This is kind of a quick and fast overview of this. So, if we take a look at the major sources of revenue by level of government, what we see is that each government has kind of the primary source of revenue coming from a different source. So, for the federal government, at least since the passage of the 16th Amendment, the individual income tax is the largest source of revenue. For state governments, the sales tax is the largest source of revenue for most states. Not all states have a sales tax, and in some states, the income tax is pretty much on par with the sales tax. And finally, at the local level, the property tax, in which your home is valued at a certain rate and then taxed on the basis of its worth, is the largest source of revenue for most local governments. Although local governments also, in many cases, have some form of an income or wage tax as well. So there are some constraints on state government spending. As we know, state governments, for the most part, have to have balanced budgets in a given year. So the economy is very important to state government spending, and you can see that spending goes up and down depending on the health of the economy and whether or not we're in a recession or whether or not we have growth. And what we see is that because of the fact that they have balanced budgets typically as the economy goes into a downturn, if the federal government doesn't provide more aid for state and local governments, they end up generally having to do one of two things: either cutting various programs or raising taxes. And in the last couple of cycles, we've seen that as we hit recessions, state governments are more likely to cut than they are to raise taxes. Second thing that is a constraint on state government spending is federal aid. Federal aid declines or increases over time in certain areas. Federal mandates affect whether or not states have to fund various programs. And what the federal government does can have a profound effect on state government spending. In addition to that, population shifts also affect state government spending. Either age, growing older as a population. So, for example, in Pennsylvania, we have an older population and they require social services, which sometimes then takes away from the amount of money that we have for education. In other areas of the country, what you decide to spend your money on is dependent on whether or not your state is, say, for example, a high growth state that's attracting a lot of new people, where you need more infrastructure. So population shifts and changes in demography can have a profound effect on state government spending as well. And then finally, each state has some sort of mix of an economic base in which they can tax. So states have a combination of revenue sources depending on what they're known for. So, for example, in Nevada, particularly Las Vegas and Clark County being kind of the population center point of the state of Nevada, gambling and tourists are the primary source of what they try to tax. In Alaska, natural resources are a great source of income for the state government. And they actually have something called a permanent fund, which is drawn upon the revenues that come from oil resources. And that money is then saved for the point in time in which Alaska might run out of oil. So, other states don't have those resources. In Pennsylvania, we have the Marcellus Shale, which gives us natural gas, but we've chosen not to tax that extraction other than a small user fee. A couple of things to consider when we're talking about taxation are the idea of equity and vertical equity. So equity just means that everybody who has the same using the same service should pay the same price. And in essence, what we see in Pennsylvania is we have a 3.07% income tax, and our state constitution requires that we have equal taxes for everybody. So we can't have a graduated income tax. On the other hand, other states look more towards what is called vertical equity, that those who earn more should pay more. And this is what we call kind of progressive taxation. So the idea is that there are graduated income taxes, and people in various income ranges will pay different amounts, with the wealthier paying more to subsidize the poor. In some respects, that violates the equity, but it's a different type of equity. When we talk about the budgets of states, we can talk about two separate things. To some extent, the idea that the budget has to be balanced every year is partially a misnomer. There are two types of budgets: an operating budget and a capital budget. The operating budget is basically the expenditures in a given year on all the programs that a state uses. So, whether it's to fund the state legislature or government agencies or social programs or education or whatever, that is the operating budget. However, governments can borrow money under what's called the capital budget, which is for long-term projects, whether they be building things or various other projects that take place over a long period of time. So they can borrow money for that. So where do state governments get their revenue? As we see, a lot of the revenue that state governments get doesn't actually come directly from them taxing the people within their jurisdiction. About a third of all money for state governments comes from the federal government in what we call intergovernmental transfers. When you take a look at the rest of the sources of revenue, as I mentioned, the sales tax is the largest sources of revenue. The individual income tax comes in at about 17.8%. And at the bottom, corporate income taxes are a very small percentage of state government revenue, primarily because states compete with each other to attract business. So they don't want to tax businesses very heavily because that would be a disincentive for businesses to locate within their jurisdiction. And we'll talk a bit more about charges in a couple of minutes. So where do people get their money? There's something called the general fund, which is basically where all the money goes in from taxes such as the income tax and sales tax. And then federal funds account for about a third, again, of all the funds for states. And then there are other state funds. And this would include things such as unemployment insurance, things such as tuition and fees for state universities, things such as gas taxes that are devoted specifically to things like roads. Now, one thing I wanted to mention here, and I think this is interesting, is that we talk about federal funds and getting money back from the federal government. Most of the country is a net receiver of the federal government. However, there are a number of states, and as you take a look here, predominantly from the Northeast, that pay more money into the system than they get back out of the system, right? So if you're looking here, you'll see that, New York, Connecticut, Massachusetts, New Jersey, three of the wealthier states in the country actually contribute more money to the federal government than they get back in revenues. So, that's an important component as we take a look here. Donor versus donee states. We actually in Pennsylvania receive more money than we pay into the federal government. So on average, for every dollar that we pay into the federal system through taxes or other sorts of revenue, we get $1.27 back from the federal government in various programs. So Pennsylvania gets the good end of the stick here. If you're from New Jersey, you end up paying more into the system. Now, the state sales taxes, as I mentioned, are the largest source of revenue other than intergovernmental aid from the federal government. So 45, this actually should read 2020, 45 states have sales taxes. There are a couple, Alaska, Delaware, Montana, New Hampshire, and Oregon, that do not. Of course, we're very familiar with the fact that Delaware does not have a sales tax. That's why everybody drives down to Delaware to buy all of your goods that you want to buy. Technically, if you buy something in Delaware and don't pay a sales tax on it, You're supposed to declare that on your taxes in Pennsylvania, but nobody really does that. 38 states also authorize their local government to have some form of sales taxes. Now, there are two types of sales taxes that we have. One is a general sales tax, which is the same across the board. I'll show you some variations of that in a minute. And then second, there are selective sales taxes, which are targeted taxes on specific things that the government wants to get revenue from. And we'll take a look at that in a minute as well. Now, when it comes to the general sales taxes, in most cases, there are exemptions for that. So in most states, food products are not taxed. So if you go to the grocery store, that's a kind of an essential item, food, so it is not taxed. And in many cases, medication that you buy, particularly prescription drug medication, is not taxed. And depending on the state, over-the-counter medication is taxed or not taxed. In addition to that, nonprofits usually do not have to pay sales taxes when they purchase items. One thing I would say is that there's a extremely complicated formulas for deciding what is and is not exempt. One of the reasons why it was so difficult to start collecting internet sales taxes was that states have such a complex sales tax that it was too hard to be able to force companies to be able to collect sales taxes depending on the state. So for example, I'll just give you an example here in Pennsylvania. When it comes to food, as I just mentioned, if you go into your local, let's just say your Giant store, and you buy a package of chicken to take home and cook, that is not taxed. If you go in and you buy a prepared meal, that is taxed, because we differentiate between food that you buy to make on your own and food that you buy that is already cooked and ready to eat. So that gives you just a tiny insight into the complexity of the tax code. 46 states have corporate income taxes. Showed earlier that that's not really a large sources of revenue for states, because they want to remain economically competitive to attract business. The general sales taxes across the country. Here's a map. We do have the 5 states that do not have sales taxes. And if you look at this, there's a pretty broad range of sales taxes in the United States. California is the highest at 7.25%. There's 4 other states that have 7%. And then the lowest in the country is Colorado at 2.9% for their general sales tax. The median, or the typical sales tax in the United States is in the area of about 6%. So Pennsylvania falls squarely in the norm, we could say, because ours is 6%. Jersey's a little higher at 7%. Now, there are other things in which we have these kind of selective sales taxes that I mentioned. So they account for a decent chunk of revenue for the state. And this is from 2019 in Pennsylvania. The total revenues that we had in Pennsylvania were $43.1 billion. Some of the biggest sources of selective sales taxes were our motor fuel tax. So when you buy a gallon of gas, those taxes are included in the price of your gallon of gas. And that accounted for $3.3 billion here in Pennsylvania, which is generally dedicated towards roads and transportation. There's an amusement tax. So if you go towards a sporting event, a concert, or you go to some sort of roller coaster or amusement park, there are taxes included in your price of admission. There's alcoholic beverages taxes. When you pay your utility bills, there are sales taxes included in them. If you bet on horses and the pari-mutuels, there are taxes included there. And when you pay your insurance, there's also taxes on that as well. So this is just a couple of examples of selective sales taxes. These are oftentimes called sin taxes because The aim is really to raise revenue and also to attempt to be able to stop undesirable behavior, at least undesirable behavior as determined by the government. So, for example, the sugary beverages tax in Philadelphia is supposed to fund education and source of revenue, but it's also help stop obesity. So it's the government trying to raise revenue while encourage you to do certain things. The biggest thing that we'd say is a sin tax is our cigarette taxes. The tax very heavily around the country. If you take a look at the United States, the median cigarette tax rate on each pack of cigarettes that you might buy is $1.70. New York's got the highest cigarette tax rate in the country at $4.35 per pack. And New Jersey and Pennsylvania are roughly the same at $2.70 a pack and $2.60 a pack. And the smallest amount of cigarette tax rate that we have in the country is Missouri. I have no rhyme or reason why that's the case. For a long time, Virginia had none on no cigarette tax, but they were a tobacco producing state. Missouri, that doesn't really make any sense. We also have user fees, and these are called license fees oftentimes. So the idea here is that we're taxing individuals who use a service from the government rather than everybody within the specific state. And usually this fund then gets earmarked for services related to that product that you use. So fishing license you see here, when you buy a fishing license in Pennsylvania, that allows the Game Commission also to stock the rivers and lakes throughout the state. And the idea is, well, why should people that don't fish have to pay for that sort of thing? It's also easier to raise these fees because not everybody sees the fees go up, as opposed to, say, for example, an across the board tax increase on income tax or the sales tax. So to give you an idea here, again, looking at 2019 in Pennsylvania, on revenues of $43.1 billion, we get about $1.15 billion from our motor vehicle license taxes. So you pay $36 or so every year to register your car, and that adds up. So that's a source of revenue that goes to PennDOT. Also, you have your motor vehicle operators licenses. So when you have to re-up to get your new driver's license, that's a source of revenue for the state as well. Hunting and fishing licenses, licenses to sell alcoholic beverages, and license to operate amusements as well are other sources of revenue. So what about local governments? We see that local governments, like state governments, get about a little bit over a third of their revenue from intergovernmental transfers. Unlike state governments who pretty much only get money from the federal government, local governments get money from both the federal government and the state governments in the intergovernmental transfers. As you see, property taxes account for about a third of all revenue for local governments. Typically in Pennsylvania, you pay two property taxes, one in the spring, one in the fall. One goes towards your school district and the other goes towards your local government, and part of that goes towards the county. Sales taxes, as you see, are a rather small kind of source of revenue for local governments, and individual income taxes are not a big source for local governments. However, they are becoming more popular to use. They're considered to be earned income taxes. So Philadelphia's got a wage tax. If, for example, you work in Chester, they've just recently raised the earned income tax. If you don't live in Chester, the income tax is 2%. If you do, if you don't live in Chester, the income tax is 2%. If you do live in Chester, it's only 1%. So, wider employees are now double taxed of residents, of Chester. So what did we spend all this money on? So if you take a look at state expenditures in the chart in the left-hand corner, taking a look at all expenditures, what we see is that at this point in time, Medicaid is the largest source of expenditures for state governments. However, if you were to if you were join higher education and elementary and secondary education together, that amounts to 28.7%, which is pretty much on par with Medicaid. So, in sum total, education and healthcare for the poor are the two largest sources of expenditures by state governments. And the smallest kind of little slice there goes towards public assistance. So things like welfare programs. Now, own source revenue, which you see down on the right hand side, is kind of the general fund expenditures. We see from there that the largest source of expenditure goes towards elementary and secondary education, over a third of all expenditures for that. And while Medicaid is the largest source, one of the largest sources of expenditures overall, most of the money that gets spent for Medicaid, as we can see, doesn't come from the general fund of the state, but rather from federal fund expenditures. So if you take a look at the top chart, 55% of all money that comes from the federal government to the states actually goes towards Medicaid. So that's where most of the money comes from. And if you take a look here, federal government really doesn't have all that much involvement when it comes to education. While we talk about education presidents and so forth, the reality is it's funded by state and local governments. So only about 11% of all funding from the federal government goes towards education. And so finally here, I guess the question is, how do state and local government expenditures differ? The biggest thing that you'll see here is that the yellow bar versus the blue bar, states are blue, local governments are yellow. Elementary and secondary education are overwhelmingly the most important expenditures by local governments. On the other hand, public welfare, which includes things like Medicaid, are the biggest sources of expenditures for states. So that's where we really see the differentiation. And higher education is primarily funded through the state government. So that gives us an idea, a brief overview. Obviously, it's much more complex than that, but these are kind of an introduction, I guess you could say, to state and local expenditures and taxation.